lending markets, money markets, and crypto banks. Today we are talking about not necessarily Aave, but let's go over that first. This is a platform where you can deposit funds, earn interest, and you can borrow against your collateral. This provides different opportunities in crypto, whether you go long or short different assets, or if you want to use leverage. Now that's a lot of different terminology, which we'll walk into as we go over Suilend, which is a money market or crypto bank on the SUI blockchain. But there's risks. So we're going to go over those risks right now, and that's things can collapse. DeFi is risky. Things happen. So I would not go all in on anything in DeFi. I would diversify just because you have that risk. But with that said, it is a team with experience. They were formerly known as Suilend on the Solana blockchain. They have rebranded to Safe Finance, and at the moment they have a TVL of $209 million, and that's a lot of money, which is equivalent to the amount that people are trusting them with their money. This video is not sponsored, this is just my own opinion and just me sharing things about the Suilend platform just because people have been asking how this works, and I think it's going to be a great tutorial if you want to get started in DeFi and learning how these markets work. Now, Suilend itself doesn't have crazy interest rates for deposits and borrows. They're very, very sane interest rates in most scenarios just because you earn interest in the assets you are depositing. So you're not getting some other coin in exchange that drops to zero immediately, like a lot of these other DEX yield farms that collapse very quickly on many, many EVM chains. If you don't know what that means, that's all right. You missed out on getting scammed. So good for you. So this video is just my full experience, tutorial, and training on Suilend. With that, I'm Dan. Let's get started. For this video, I am using the SUI Wallet Chrome extension. It is attached to a Gmail account, and that makes it really easy to sign in because I just sign in with one click because it is on a Chrome profile. It's not the safest thing to do if you have a significant amount of funds that you can't afford to lose. You're going to want to manage your own wallet. But I do like this because it's very easy, it's very user-friendly, and this allows more people to get involved with crypto without all the complications. Now let's get familiar with the platform. On the left here in the first column, you can see that these are the different assets available for you to deposit. Under deposit APR, those are the different rates. Under borrow APR, those are the different rates as well. And anytime you have a rate in parenthesis, like for SUI and Solana, as you can see here, that means they're paying you to borrow it. Yes, you earn interest for borrowing these assets. But of course, if that asset goes up in price, it's more expensive to pay back. So then you lost money. And that's one of the opportunities when it comes to these money markets, crypto banks, whatever you may call it. The opportunity is for you to earn interest, to earn leverage, and to go short or long on different assets. So with that in mind, let's take a look at using this platform. Now, I am bullish on SUI long term, and I'm talking 1 year, 2 year, 5 years from now. So we're going to deposit some SUI. And you can see at the top here, we have deposit, borrow, withdraw, repay. You want to make sure you're in the right tab. So right now we are going to deposit 100 SUI. We're going to click that, and then we're going to approve the transaction in our wallet. So we're going to hit approve. No cutting here, all real time, 100 SUI deposited. Super quick. Now, with that, we can borrow some funds. So in our accounts tab here, we can hit overview. It's going to give a bigger picture of what's going on in our account. But you can see that we have a borrow limit of $131 because we put up 100 SUI in collateral. This might get a little confusing, but we're talking LTV BW, loan to value, borrow weight. So 100 SUI is worth $188 at the current price, and I can borrow up to $131 because of the collateral I provided. If I have to pay interest on that, or if SUI goes down in price and I'm borrowing $131, I'm going to get liquidated. So I want to stay away from that point as much as possible. So they gave us a very clean bar here. I'm going to borrow a stable coin because a stable coin stays at a stable price full screen Dan here. And if the price of SUI gets higher, I'd be able to sell that SUI, a lot of S's here, for more money. And then that makes paying back that stablecoin much more affordable and I take in more profits. Whereas on the opposite side of that, if I want to short SUI, I would deposit stablecoins, borrow SUI, and expect that price to get lower, and it's cheaper to repay those borrows. So that's kind of how going long or short works when it comes to these lending platforms. So with that, let's borrow Wormhole USDC because it's not real USDC, it's credits, and if they collapse, well, we don't have to pay back much. So that's great. And also it is the lowest interest rate. So if you look at the top here, borrow APR, we can borrow from anything, but the lowest rates right now for a stablecoin is with Wormhole USDC. So I see a lot of value there. So we're gonna hit the borrow section and we're gonna borrow 100 USDC. We're gonna borrow, we're gonna approve that transaction, and we have borrowed that, and we have borrowed it, but this doesn't close automatically, so we want to click out of here. Then we go to swap. So we're gonna go to swap and we're gonna trade the Wormhole USDC that we just got, and we're gonna trade all of it for more SUI. And we have two options here. These are two buttons. We can swap 100 USDC for SUI, or we can swap and deposit directly back into that lending pool. So this saves us some extra clicking, probably like 5 different clicks. And I like that, and it's possible on SUI, so that's what we're gonna do. So before we approve that transaction, we're gonna see our balance changes, and you're gonna see we're gonna lose a little bit of SUI, and that's because of the gas transaction fees. We're gonna lose 100 USDC, and we're gonna get a little bit of USDC for some reason, but I'll take that. And if we scroll down more, we're gonna see some changes. So whenever you deposit into Suilend, you get an NFT that shows your position. So you don't wanna delete this NFT, you don't wanna get rid of it. Be careful, don't interact with other NFTs, that could be scams. But yeah, you get an NFT that represents your balances on Suilend and other apps on the Sui blockchain. So with that, I'm going to approve the transaction. It's going to trade the USDC for Sui. It already did that, and it deposited that back into the pool. So now under deposited assets, you can see we have 153 SUI. So in that swap section, we were able to swap and deposit in just one click. Now earlier, we borrowed 100 wrapped USDC, and you can see our balance is now 100.2 USDC. And I think you also noticed that that number just changed in real time. So the cool thing about Suilend, everything happens in real time. Now, since we're paying interest to borrow USDC, the amount we borrow is slowly going to go up automatically over time, and we just have to pay that back. So we're not making any interest payments, that's automatically rolled in to the amount we're borrowing. Additionally, we're also earning rewards for the amount we're staking, and that can be claimed at any time. So if you want to get APY, if the rewards are higher than the gas fee, then it's worth it. On some of my other accounts, I'm getting pretty much a Big Mac meal a day in SUI rewards, which is pretty nice. That kind of pays for bad fast food habits. Now up here you can see the bar. This is the amount that we've borrowed. This is the amount we can still borrow, but we never want to go past this other line. If we hit show breakdown, we can get a little more information, and we can also click this overview button and see what's happening with our accounts for earnings and our history. Now let's say you want to close out your position and you want to withdraw everything from Suilend. You can do that. It's pretty easy to do. I'm gonna hide that breakdown. So we have borrowed assets. We can't withdraw our SUI until we repay it. So that's easy. We're just gonna have to withdraw some of our SUI. So we're gonna hit withdraw, we're gonna hit max, we're gonna see how much we can borrow. We don't wanna borrow everything just in case the price gets volatile. So let's say we withdraw 70 SUI. I'm going to approve that. And then once it's done, we're gonna switch over to swap, and we are gonna trade that SUI for Wormhole USDC, and we need at least 100.2 USDC. So I'm gonna swap 50 SUI. Let's see if that is enough. That is not. Let's do 55.6, and that's good. We're gonna hit swap. Not swap and deposit, but just swap because we need to repay our loan. So we got this weird exception here. That's not a problem. We can't close it. That is just an error. I just hit refresh, and then you go to dashboard, and then we can repay our loan. So scrolling down under borrowed assets, hit repay, hit max, and confirm the transaction. That gets approved, and once this is completed, we can withdraw our collateral. Super easy to do. Withdraw max, which is correct. Yeah, we do have 83 in there. Withdraw max, and then approve the transaction. And that's how you use a lending platform. If you want to take out your deposits, you have to pay back any money you owe first, at least if you want to take out all of them. Now, if you're just trying to earn points for the upcoming Suilend airdrop, you're gonna wanna see this. Depending on what you deposit or borrow, you're gonna get different points. So depositing SUI, you get 0.028 per day per SUI. If you borrow SUI, you're gonna get 0.209. So that's almost 10x more points by borrowing SUI rather than depositing. And if we look at USDC, that's 0.53 per day if you borrow, and 0.3. And if you get wormhole USDC, you get nothing. There's no send points there. So if you're trying to farm the airdrop, there's ways to optimize based on what you deposit and borrow in the platform. And while we're here, let's take a look at SpringSui. Now, SpringSui is liquid staked SUI, and that just means it's earning interest. It's already a SUI that's on a validator, and it's earning interest directly for participating in the network rewards. So if you're familiar with liquid staking, this might be Lido ETH, this might be EtherFi ETH, but with SUI, it's better because there's no depegging. The assets are one-to-one at all times. So let's go over this thread that explains everything really well by 0xRooter, one of the developers of Suilend and SpringSui. SpringSui, or SSui, introduces instant and unlimited staking, in other words, infinite liquidity. It eliminates one of the biggest risks for LSTs, depegging, since SSui can be instantly unstaked, risk-free arbitrage, pegs the value one-to-one. This is only possible on the SUI blockchain. Now, LST depegs is a thing that actually happens, easy ETH and WETH. There's some volatility there, and that's not great. You always want the value of what you're holding to hold its value. And when it comes to LSTs, they're supposed to be representing your stake on the network. So when we see SSui on Suilend, that's actually earning more interest than we think, because it's automatically earning the interest rate from being staked SUI. So the value is going to increase over time as the interest rates are rolled into the SSui coin. Now, SpringSui is a feature that's only available on the SUI blockchain, and other people can make their own liquid staked assets too. I can make DSUI, but I think I need like $25 million to put up enough collateral to make that happen. I don't have that much, so I won't be doing that, but you can see that SSui does, and that there are trading pairs using that, like AAA, where you can get up to 30% APR for adding liquidity on Cetus. Obviously, that's very high risk, and it's very dependent on what happens to the coin price of AAA. So that's too high risk for my blood, and I want to do that, and I'd rather just hold long-term in a lending platform, but not my entire balance because that's risky. You gotta diversify when it comes to crypto. Now, just a warning, SpringSui is a new platform, and I would not use it in any kind of non-SSui to SUI trading because you're going to get a poor price. So you can see there is a 10% price impact when trying to switch between SSui and USDC, and that's just because there isn't enough liquidity on chain. It takes our 1,000 SUI, routes it through SSui AAA on Cetus, through Turbos, through another trading pair on Turbos, and that gets us the USDC we want, and we lose about 10% because of that. But if we go SSui to SUI directly, 3.95% impact. Now that is still significant for 1,000 SSui, but there's an easy solution for that, and it's just to unstake that SSui, for SUI. So let's say we have 1,000 stake SUI. We're going to get all our value back by unstaking it on the SpringSui website. So if you stake SUI, you get SUI. If you unstake SUI, you get SUI. I hope that wasn't too confusing, but the purpose of that is so you don't lose money trying to use SUI through routing. And two, maybe you'll find some opportunities to buy SUI for cheap through routing, and then you'll be able to redeem it on the SpringSui site for a nice little arbitrage. That just means you make money because you bought something cheap that had a lot more value than what someone sold it for. So I hope you learned DeFi and these lending pools and how you can use them to leverage short or long different assets without too much risk. There is risk, but not too much. All right, if this video was helpful, you know what to do. And with that, I hope you got your full value for today.